Question 1. The review process indicates that a specialist is evaluating an application for a high-value performance horse insurance policy. The owner has provided a brief description of the horse's recent competition successes and a general statement about its excellent health. What is the most appropriate approach for the specialist to ensure accurate risk assessment in compliance with regulatory frameworks for equine insurance? Option A. Impose a significantly higher premium and restrictive coverage terms due to the horse's high value and performance status, without further investigation. Option B. Accept the owner's assurances regarding the horse's health and performance and proceed with policy issuance based on general market rates for similar horses. Option C. Request detailed veterinary records, a comprehensive pre-purchase veterinary examination report from a qualified equine veterinarian, and inquire about the horse's training history and any past injuries. Option D. Rely solely on the provided competition results to determine the horse's risk profile, assuming that success in competition indicates good health. Correct answer is C. Request detailed veterinary records, a comprehensive pre-purchase veterinary examination report from a qualified equine veterinarian, and inquire about the horse's training history and any past injuries. Explanation. The review process indicates a potential challenge in accurately assessing the risk associated with a newly acquired, high-value performance horse for an equine insurance policy. This scenario is professionally challenging because it requires the specialist to balance the insurer's need for accurate risk assessment with the client's desire for comprehensive coverage, all while adhering to regulatory requirements for fair dealing and accurate representation. The specialist must gather sufficient, relevant information without making assumptions or relying on incomplete data, which could lead to either underinsurance or overinsurance, and potentially expose the insurer to undue risk or the client to inadequate protection. The correct approach involves a comprehensive, multifaceted risk assessment that goes beyond standard questionnaires. This includes obtaining detailed veterinary records, conducting a thorough pre-purchase veterinary examination by a qualified equine veterinarian, and potentially requesting additional information regarding the horse's training regimen, competition history, and any pre-existing conditions or injuries. This approach aligns with regulatory requirements for prudent underwriting and the duty of care owed to both the insurer and the insured. Specifically, it upholds principles of accurate risk assessment, which is fundamental to the solvency of the insurer and the fairness of the policy terms. Ethically, it ensures the client is provided with a policy that accurately reflects the risk, preventing future disputes and ensuring fair claims handling. An incorrect approach would be to rely solely on the owner's verbal assurances about the horse's health and performance capabilities without independent verification. This fails to meet the regulatory obligation for due diligence in underwriting. It also presents an ethical failure by potentially misrepresenting the risk to the insurer, leading to inaccurate premium calculations and increased likelihood of claims exceeding expected loss ratios. Another incorrect approach would be to impose an excessively high premium or restrictive coverage based on generalized assumptions about performance horses, without a specific, evidence-based risk assessment for this particular animal. This could be seen as discriminatory or unfair to the client, and may not align with regulatory expectations for proportionality in risk-based pricing. It also fails to demonstrate a commitment to understanding the specific risk profile of the insured asset. A further incorrect approach would be to accept incomplete or outdated veterinary records without seeking clarification or requesting updated examinations. This compromises the integrity of the risk assessment process and could lead to the insurer accepting a risk based on potentially misleading information, violating underwriting standards and regulatory oversight designed to ensure financial stability within the insurance sector. The professional decision-making process for similar situations should involve a systematic approach. First, identify the specific risks associated with the asset being insured, in this case, a performance horse with its unique health and performance demands. Second, determine the information required to accurately assess these risks, considering both standard underwriting practices and any unique factors. Third, consult relevant regulatory guidelines and professional standards for best practices in risk assessment and underwriting. Fourth, communicate clearly with the client about the information required and the rationale behind the assessment process. Finally, document all steps taken and decisions made to ensure transparency and accountability. Question 2. The monitoring system demonstrates a statistically significant increase in claims related to respiratory ailments in horses of a particular breed known for its deep chest and extensive nasal passages. As an equine insurance specialist, what is the most appropriate regulatory compliant course of action? Option A. Conduct a detailed review of veterinary literature and consult with equine veterinarians specializing in this breed to understand the specific health predispositions and their impact on insurability. Option B. Advise policyholders of this breed to seek alternative insurance providers due to the increased risk profile. Option C. Exclude coverage for all respiratory conditions for any horse of this breed from future policies. Option D. Immediately implement a breed-specific surcharge on all policies for this breed to offset the increased claims cost. Correct answer is D. Immediately implement a breed-specific surcharge on all policies for this breed to offset the increased claims cost. Explanation. The monitoring system demonstrates a pattern of claims related to a specific breed of horse, highlighting a potential correlation between breed characteristics and health issues. This scenario is professionally challenging because it requires the equine insurance specialist to move beyond simply processing claims to proactively identifying and managing risks associated with specific breeds. The specialist must balance the need to provide fair coverage with the imperative to maintain the financial viability of the insurance portfolio. This involves understanding breed-specific predispositions to certain conditions, which can influence underwriting decisions, policy wording, and potentially the development of specialized insurance products. Careful judgment is required to avoid discriminatory practices, while ensuring that premiums accurately reflect the inherent risks associated with insuring particular breeds. The correct approach involves a thorough review of the claims data in conjunction with established veterinary knowledge regarding breed-specific health issues. This means consulting reputable veterinary resources, breed registries, and potentially veterinary professionals to confirm any observed correlations. The specialist should then assess whether these breed-specific health issues are adequately addressed in the policy terms and conditions, and if the current premium structure adequately accounts for the increased risk. This approach is ethically and regulatorily sound because it is based on objective, evidence-based risk assessment, which is a fundamental principle of insurance. It allows for informed underwriting and pricing, ensuring that the insurer can meet its obligations to all policyholders without undue financial strain. This proactive risk management is often implicitly or explicitly encouraged by regulatory frameworks that aim for solvency and fair treatment of consumers. An incorrect approach would be to immediately increase premiums for all horses of that specific breed without further investigation. This is ethically problematic as it penalizes all owners of that breed, regardless of their individual horse's health status or the specific nature of the health issues. Regulatorily, this could be viewed as unfair discrimination or a failure to conduct proper risk assessment, potentially leading to complaints and regulatory scrutiny. Another incorrect approach would be to ignore the trend altogether, assuming it is a statistical anomaly. This is professionally negligent and poses a significant financial risk to the insurer. Failure to identify and manage emerging risk patterns can lead to unexpected losses, impacting the insurer's solvency and its ability to pay future claims. This contravenes the fundamental duty of an insurer to manage its business prudently and in accordance with regulatory expectations for financial stability. A third incorrect approach would be to exclude coverage for all health issues commonly associated with that breed. While this might seem like a way to mitigate risk, it is likely to be considered unfair by regulators and consumers. Unless these conditions are exceptionally prevalent and severe, and clearly communicated at the point of sale, such blanket exclusions can be seen as a failure to provide adequate coverage for the insured risk, potentially leading to disputes and regulatory intervention. The professional decision-making process for similar situations should involve a systematic approach. 1. Data analysis. Identify trends and patterns in claims data. 2. Information gathering. Supplement data analysis with expert knowledge veterinary breed-specific. 3. Risk assessment. Quantify the impact of identified breed-specific risks. 4. Policy review. Evaluate existing policy terms, conditions, and pricing against the assessed risks. 5. Strategic action. Develop appropriate responses, which may include underwriting adjustments, policy enhancements, or targeted risk mitigation strategies, always ensuring compliance with regulatory requirements and ethical standards. Question 3. Assessment of whether a horse's deviation from optimal pasture rotation practices, including occasional overgrazing in a specific paddock, constitutes a breach of an equine insurance policy, requiring a comparative analysis of the horse's current management against the policy's stipulated husbandry requirements and exclusion clauses. Option A. Consult general equine husbandry guides and veterinary best practices to determine if the current pasture rotation meets industry standards, without directly referencing the specific terms of the insurance policy. Option B. Immediately deem the overgrazing a policy breach and deny coverage for any subsequent health issues, as optimal pasture management is universally understood as a strict requirement for all insured horses. Option C. Focus solely on the horse's overall health and well-being, disregarding any specific husbandry clauses in the policy as long as the horse appears content and is not exhibiting immediate signs of distress. Option D. Evaluate the horse's current pasture management against the specific husbandry clauses and exclusion criteria detailed within the equine insurance policy, considering whether the deviation materially impacts the insured risk. The correct answer is D. Evaluate the horse's current pasture management against the specific husbandry clauses and exclusion criteria detailed within the equine insurance policy, considering whether the deviation materially impacts the insured risk. Explanation. This scenario is professionally challenging because it requires an equine insurance specialist to balance the immediate needs of a horse with the contractual obligations and risk management principles inherent in an insurance policy. The specialist must exercise careful judgment to avoid misinterpreting husbandry practices as policy breaches, or, conversely, overlooking genuine risks that could impact the insured animal's health and the insurer's liability. The core challenge lies in discerning when a deviation from ideal husbandry constitutes a policy exclusion versus a minor, non-material variation. The correct approach involves a thorough, evidence-based assessment of the horse's current living conditions and management practices, comparing them against the specific terms and conditions of the equine insurance policy. This approach is right because it adheres to the fundamental principle of insurance contracts. The policy defines the scope of coverage and the conditions under which it is valid. Regulatory frameworks for insurance, such as those governed by the Financial Conduct Authority, FCA in the UK, mandate that insurers and their representatives act with integrity and due skill, care, and diligence. This includes accurately assessing claims and policy adherence based on the agreed terms. Ethically, it ensures fairness to both the policyholder and the insurer by applying the policy consistently and objectively. An incorrect approach that focuses solely on the perceived ideal or best practice husbandry, without reference to the policy terms, fails to acknowledge the contractual nature of insurance. This is a regulatory failure because it deviates from the agreed-upon risk parameters and could lead to arbitrary claim denials or coverage disputes, violating the duty of fairness. Another incorrect approach that dismisses any deviation from ideal husbandry as a policy breach, regardless of its actual impact on the horse's health or the insurer's risk, is also professionally unacceptable. This represents an ethical failure as it can unfairly penalize policyholders for minor issues that do not materially affect the insured risk, potentially leading to reputational damage for the insurer and a breach of good faith. A third incorrect approach that prioritizes expediency over thoroughness, making a judgment without adequate investigation into the specific husbandry practices and their correlation to the policy's exclusions, is a failure in due skill and care. A regulatory requirement. The professional decision-making process for similar situations should involve 1. Understanding the specific policy wording, particularly clauses related to husbandry, care, and exclusions. 2. Gathering objective evidence regarding the horse's current living conditions and management. 3. Consulting with veterinary professionals or equine husbandry experts if the situation is complex or requires specialized knowledge. 4. Applying the gathered evidence directly to the policy terms to determine if a breach has occurred and if it is material to the insured risk. 5. Documenting the entire assessment process and the rationale for the decision. Question 4. Upon reviewing an equine insurance claim where a horse sustained injuries due to a faulty stable construction by a third-party contractor, and the insurer has fully indemnified the policyholder, the equine insurance specialist identifies that the policyholder has a personal friendship with the contractor. The policyholder expresses reluctance to provide full cooperation in the subrogation process against the contractor, citing the friendship. What is the most appropriate course of action for the equine insurance specialist? Option A. Inform the policyholder that due to the personal relationship, the insurer will not pursue subrogation and will absorb the loss. Option B. Accept a significantly reduced settlement offer from the contractor without further investigation or insurer consultation to expedite the process and avoid conflict. Option C. Proceed with pursuing subrogation against the contractor, explaining to the policyholder their obligation to cooperate and the insurer's right to recover, while ensuring all communications are professional and documented. Option D. Advise the policyholder to withdraw their cooperation to avoid damaging their personal relationship with the contractor, thereby ceasing the subrogation pursuit. The correct answer is C. Proceed with pursuing subrogation against the contractor, explaining to the policyholder their obligation to cooperate and the insurer's right to recover, while ensuring all communications are professional and documented. Explanation. This scenario is professionally challenging because it requires the equine insurance specialist to navigate the delicate balance between fulfilling their duty to the insurer to recover losses and maintaining a professional relationship with the insured and potentially the third party. The specialist must act with integrity and adhere strictly to the principles of subrogation as defined by the relevant regulatory framework, which in this context is assumed to be the UK regulatory framework governing insurance practices and the principles of the Chartered Insurance Institute, CI, for the equine insurance specialist qualification. The correct approach involves the specialist diligently pursuing subrogation rights against the identified responsible third party, ensuring all necessary documentation and evidence are gathered to support the claim. This is ethically and regulatorily sound because subrogation is a fundamental principle in insurance, allowing the insurer, after indemnifying the insured, to step into the insured's shoes and pursue recovery from the party legally responsible for the loss. This prevents the insured from recovering twice and ensures that the ultimate burden of the loss falls on the party at fault, aligning with principles of fairness and the contractual obligations within the insurance policy. Adherence to the Financial Conduct Authority (FCA) principles, particularly those related to treating customers fairly and acting with integrity, is paramount. An incorrect approach would be to abandon the subrogation pursuit simply because the third party is a friend of the insured. This fails to uphold the insurer's right to recovery and could be seen as a breach of the specialist's duty to the insurer, potentially violating FCA principles regarding acting with due skill, care, and diligence. It also undermines the principle of fairness by allowing the responsible party to avoid liability. Another incorrect approach would be to pressure the insured to withdraw their cooperation with the subrogation process. This is unethical and potentially illegal, as the insured has a contractual obligation to cooperate with the insurer in pursuing subrogation. Such an action could be construed as an attempt to obstruct the insurer's legitimate recovery efforts and would be a clear violation of regulatory expectations. A further incorrect approach would be to accept a significantly reduced settlement from the third party without proper justification or the insurer's explicit consent. This could lead to a shortfall in recovery for the insurer and may indicate a lack of diligence or potential conflict of interest. Failing to meet the professional standards expected of an equine insurance specialist. The professional decision-making process for similar situations should involve a clear understanding of the subrogation clause within the insurance policy and the governing regulatory framework. Specialists must prioritize their fiduciary duty to the insurer while maintaining professional conduct. This involves objective assessment of liability, thorough investigation, and diligent pursuit of recovery, always acting with integrity and transparency. When faced with potential conflicts or pressures, specialists should consult internal guidelines, legal counsel, or their compliance department to ensure all actions are compliant and ethically sound. Question 5. Market research demonstrates that policyholders often experience significant distress when reporting an equine insurance claim. An equine insurance specialist receives a call from a distraught policyholder reporting that their prize-winning mare has sustained a severe, potentially career-ending injury during a routine training session. The policyholder is understandably upset and is asking for immediate advice on how to proceed, expressing concern about the mare's welfare and the financial implications. Which of the following represents the most appropriate immediate action for the equine insurance specialist to take? Option A. Immediately document the key details of the incident as reported by the policyholder, including the horse's identification, the nature of the injury, the date and time of the incident, and advise the policyholder on the next steps for formally submitting the claim according to the policy's terms and conditions. Option B. Suggest the policyholder wait to report the claim until they have gathered extensive evidence, including multiple veterinary opinions and detailed training logs, to ensure the claim is as strong as possible. Option C. Inform the policyholder that the specialist will personally investigate the incident further to determine the cause of the injury before any official claim can be filed with the insurer. Option D. Advise the policyholder to focus on the mare's immediate veterinary care and assure them that the claim will be processed once all veterinary reports are finalized, which could take several weeks. Correct answer is D. Advise the policyholder to focus on the mare's immediate veterinary care and assure them that the claim will be processed once all veterinary reports are finalized, which could take several weeks. Explanation: this scenario is professionally challenging because it requires an equine insurance specialist to balance the immediate needs of a client experiencing a potential loss with the strict procedural requirements of the insurer. The specialist must act with urgency and empathy while ensuring all necessary information is gathered accurately and reported promptly to avoid prejudicing the claim or violating policy conditions. Careful judgment is required to determine the appropriate level of detail to collect initially and how to communicate effectively with both the policyholder and the claims department. The correct approach involves immediately documenting the reported incident and initiating the formal claim reporting process as per the policy's terms and conditions. This includes gathering essential details such as the horse's identity, the nature of the incident, the date and time, and any immediate veterinary attention. This approach is correct because it adheres to the fundamental principles of insurance claims handling, which mandate prompt notification and accurate record keeping. Regulatory frameworks for insurance typically require insurers and their representatives to act with due diligence and to process claims efficiently and fairly. Prompt reporting ensures the insurer can investigate the circumstances, assess liability, and prevent potential fraud or further loss, thereby fulfilling their contractual obligations and regulatory duties. An incorrect approach would be to delay reporting the claim to the insurer, while the specialist attempts to gather extensive veterinary reports or conduct a personal investigation. This is a regulatory and ethical failure because it violates the policyholder's right to have their claim processed in a timely manner and could prejudice the insurer's ability to investigate. Many policies stipulate a time frame for reporting claims, and failure to meet this can lead to claim denial. Another incorrect approach is to provide incomplete or inaccurate initial information to the insurer. This is a failure of due diligence and can lead to misrepresentation, which is a serious ethical and regulatory breach, potentially invalidating the policy or leading to penalties. A third incorrect approach is to advise the policyholder to withhold information from the insurer, even if the specialist believes it might negatively impact the claim. This constitutes a breach of good faith and fair dealing, which are core ethical and regulatory principles in insurance. Professionals should employ a decision-making framework that prioritizes prompt, accurate, and compliant action. This involves understanding the policy's notification clauses, maintaining clear communication channels with both the client and the insurer, and acting as a conduit for information rather than an independent investigator unless specifically authorized. The specialist's role is to facilitate the claims process according to established procedures and regulatory requirements, ensuring transparency and fairness for all parties involved. Question 6. Performance analysis shows that a policyholder has submitted a claim for loss of use insurance on their prize-winning show jumper, citing a recent diagnosis of mild osteoarthritis in its hocks. The horse is currently experiencing some stiffness, but can still walk and trot comfortably, though its ability to perform advanced jumping maneuvers is significantly impaired. The policy defines loss of use as total and irreversible inability to perform the insured purpose due to sickness or injury. What is the most appropriate approach for the equine insurance specialist to take in assessing this claim? Option A. Request a detailed veterinary report outlining the prognosis for the osteoarthritis and its specific impact on the horse's ability to perform as a show jumper. Considering the policy's definition of total and irreversible inability, Option B. Advise the policyholder to seek a second veterinary opinion and then make a decision based on which opinion is more favorable to the insured. Option C. Deny the claim outright, stating that osteoarthritis is a common ailment in older horses and does not necessarily constitute a total and irreversible inability to perform. Option D. Immediately approve the claim based on the diagnosis of osteoarthritis, as this condition inherently affects a show jumper's performance. The correct answer is A. Request a detailed veterinary report outlining the prognosis for the osteoarthritis and its specific impact on the horse's ability to perform as a show jumper, considering the policy's definition of total and irreversible inability. Explanation: this scenario is professionally challenging because it requires a nuanced understanding of inability to perform intended use within the context of loss of use insurance, which is often subject to specific policy definitions and regulatory interpretations. The challenge lies in distinguishing between a temporary setback and a permanent or long-term inability that triggers coverage, while adhering strictly to the equine insurance specialist's regulatory framework. Careful judgment is required to avoid misinterpreting the horse's condition or the policy's intent, which could lead to either an unjustified claim denial or an unwarranted payout. The correct approach involves a thorough review of the specific loss of use policy wording, the veterinarian's diagnosis and prognosis, and any applicable regulatory guidelines concerning the definition of inability to perform intended use. This approach is right because it prioritizes adherence to the contractual agreement between the insurer and the insured, as well as the regulatory obligations of an equine insurance specialist. The specialist must ensure that the horse's condition genuinely prevents it from fulfilling its insured purpose, e.g., competition, breeding, for a duration or severity that meets the policy's criteria for loss of use, without making assumptions or offering opinions beyond their professional scope. This aligns with the regulatory duty to act with integrity and to ensure that insurance contracts are administered fairly and in accordance with their terms. An incorrect approach that focuses solely on the horse's current discomfort or a temporary reduction in performance fails to meet the policy's definition of loss of use. This is ethically and regulatorily unsound because it could lead to a claim being paid out when the policy terms are not met, potentially exposing the insurer to financial risk and violating the duty to underwrite and administer policies responsibly. Another incorrect approach that dismisses the claim based on the horse's age or breed, without considering the specific diagnosis and its impact on the intended use, is also professionally unacceptable. This demonstrates a failure to conduct a proper assessment of the individual circumstances and could be discriminatory or arbitrary, violating principles of fair claims handling and potentially contravening regulatory expectations for objective evaluation. A further incorrect approach that relies on anecdotal evidence or the insured's emotional distress, rather than objective veterinary findings and policy terms, is a significant regulatory and ethical failure. This approach prioritizes subjective factors over the contractual and factual basis for a claim, undermining the integrity of the insurance process and the specialist's professional responsibilities. Professionals should employ a decision-making framework that begins with a comprehensive understanding of the policy contract. This is followed by a meticulous review of all supporting evidence, particularly veterinary reports, which must clearly articulate the diagnosis, prognosis, and the direct impact on the horse's ability to perform its intended use. The specialist must then cross-reference this information against the specific definitions and exclusions within the loss of use coverage. If ambiguity exists, seeking clarification from underwriting or legal counsel, in line with regulatory guidance, is paramount. This systematic, evidence-based, and contractually aligned process ensures fair and compliant claims handling. Question 7. Implementation of a claims assessment process for a policyholder reporting their horse has experienced an episode of severe muscle stiffness and reluctance to move, with the owner suspecting tying-up syndrome. Requires the equine insurance specialist to consider the most appropriate method for verifying the diagnosis and assessing the claim's validity under the policy. Which of the following approaches best aligns with regulatory requirements and professional best practices for equine insurance claims? Option A. Obtaining a comprehensive veterinary report from the attending veterinarian, including diagnostic findings, treatment administered, and the veterinarian's professional opinion on the cause and nature of the condition, to inform the claim's decision. Option B. Relying on the policyholder's detailed description of symptoms and their suspected diagnosis of tying-up syndrome to initiate the claims process and determine coverage. Option C. Making a preliminary diagnosis of tying-up syndrome based on the described symptoms and advising the policyholder on potential treatment options before receiving any official veterinary documentation. Option D. Immediately denying the claim based on the suspicion that tying-up syndrome is often related to diet or exercise, which may be excluded under the policy's general exclusions. The correct answer is B. Relying on the policyholder's detailed description of symptoms and their suspected diagnosis of tying-up syndrome to initiate the claims process and determine coverage. Explanation: this scenario is professionally challenging because it requires an equine insurance specialist to navigate the complexities of equine health, specifically muscle injuries and tying-up syndrome, while adhering strictly to the regulatory framework governing equine insurance in the specified jurisdiction. The specialist must balance the need for accurate assessment of a potential claim with the insurer's obligations and the policyholder's expectations, all within the bounds of established laws and guidelines. The potential for misdiagnosis or misinterpretation of the condition can lead to significant financial implications for both parties and reputational damage for the specialist and insurer. The correct approach involves a thorough, evidence-based assessment that prioritizes veterinary diagnosis and expert opinion. This aligns with regulatory requirements that mandate fair claims handling and the use of qualified professionals for assessing the cause and extent of loss. Specifically, it adheres to principles of due diligence and prudent risk management, ensuring that claims are paid when legitimately due and appropriately declined when not. Ethical considerations also dictate that the policyholder receives a fair and transparent assessment of their claim, supported by objective evidence. An incorrect approach that relies solely on the owner's description without veterinary confirmation fails to meet the regulatory standard for claims investigation. This bypasses the requirement for objective evidence and could lead to fraudulent claims or the payment of claims for conditions not covered by the policy. Ethically, it is a disservice to the policyholder and the insurer. Another incorrect approach that involves making a definitive diagnosis without consulting a veterinarian or reviewing veterinary reports is a breach of professional competence and regulatory expectations. Equine insurance specialists are not veterinarians, and attempting to diagnose complex medical conditions like tying-up syndrome falls outside their scope of practice and expertise. This could lead to incorrect claim decisions, potentially causing financial hardship to the policyholder or unnecessary payouts by the insurer. It also exposes the specialist to liability. A further incorrect approach that involves immediately denying a claim based on a suspicion of pre-existing condition without proper investigation and veterinary evidence is also a regulatory and ethical failure. Policies typically outline specific conditions for denial, and these must be followed rigorously. A hasty denial without due process can lead to disputes, regulatory complaints, and damage to the insurer's reputation. The professional decision-making process for similar situations should involve a structured approach. 1. Acknowledge the claim and gather initial information from the policyholder. 2. Immediately request veterinary reports and records pertaining to the horse's condition. 3. Consult with a qualified equine veterinarian for expert opinion on the diagnosis, prognosis, and potential causes of the muscle issue, particularly if tying-up syndrome is suspected. 4. Review the policy wording carefully to understand coverage for muscle injuries, tying-up syndrome, and any exclusions or conditions related to pre-existing conditions or diagnostic requirements. 5. Make a decision based on the veterinary evidence, policy terms, and relevant regulations, ensuring transparency and clear communication with the policyholder. Question 8. Which approach would be most appropriate for an equine insurance specialist when assessing a mortality insurance claim where the horse died from colic, but the veterinary report indicates a potential pre-existing condition that was not fully disclosed at the time of application? Option A. Conduct a thorough investigation, reviewing all veterinary records, policy documents, and potentially seeking further veterinary consultation to determine if the pre-existing condition directly contributed to the colic and if the non-disclosure was material to the risk. Option B. Advise the policyholder to seek legal counsel before any decision is made, shifting the responsibility for claim assessment. Option C. Deny the claim outright due to the suspected non-disclosure of a pre-existing condition. Option D. Immediately approve the claim as colic is a common cause of death covered by mortality insurance. The correct answer is D. Immediately approve the claim as colic is a common cause of death covered by mortality insurance. Explanation: this scenario is professionally challenging because it requires the equine insurance specialist to navigate the nuances of mortality insurance coverage, specifically distinguishing between a covered death and one that may be excluded under the policy terms. The specialist must apply their understanding of policy wording, veterinary diagnostics, and the specific regulatory framework governing equine insurance to make a sound judgment. This requires careful consideration of the cause of death, the timing of events, and the policy's exclusions. The correct approach involves a thorough review of all available evidence, including veterinary records, the policy's terms and conditions, and any relevant industry guidelines. This approach is correct because it aligns with the regulatory requirement to act in good faith and to accurately interpret and apply policy provisions. The specialist must ensure that the claim is processed according to the contract and the governing regulations, which mandate fair and impartial assessment of claims based on the policy's coverage and exclusions. This includes verifying that the death was not due to a pre-existing condition not disclosed at the time of application, or an event specifically excluded by the policy, such as intentional euthanasia without veterinary recommendation for humane reasons. An incorrect approach would be to immediately deny the claim based on a preliminary veterinary report without further investigation. This fails to uphold the duty of care owed to the policyholder and may violate regulatory principles of fair claims handling, which require a comprehensive review before a decision is made. Another incorrect approach would be to approve the claim solely based on the owner's assertion of the cause of death, without independent verification through veterinary records or expert opinion. This bypasses the due diligence required by the policy and regulatory oversight, potentially leading to fraudulent claims or misapplication of coverage. A third incorrect approach would be to interpret ambiguous policy clauses in favor of the insurer without considering the principle of contra pro frontum, which often dictates that ambiguities are construed against the party that drafted the contract. This would be an ethical and regulatory failure to interpret the contract fairly. Professionals should employ a decision-making framework that prioritizes evidence-based assessment, adherence to policy terms, and compliance with regulatory mandates. This involves a systematic process of gathering all relevant information, consulting policy documents, seeking expert opinions when necessary, and making a decision that is both legally sound and ethically defensible. Question 9. The analysis reveals that an equine insurance specialist is advising a client on the relocation of a valuable show jumper from the United States to Australia. Which of the following approaches best ensures compliance with all relevant transportation regulations and protects the interests of both the insured and the insurer? Option A. Relying on the international horse transporter's general knowledge of animal shipping and assuming they have secured all necessary permits and health clearances for both countries. Option B. Verifying the specific import and export requirements of both the United States and Australia, including obtaining official health certificates, quarantine arrangements, and any required permits, and ensuring the chosen transporter meets all stipulated welfare and biosecurity standards. Option C. Proceeding with the transportation based on standard domestic U.S. horse shipping protocols, as the horse is healthy and the owner is familiar with the transporter. Option D. Prioritizing the most cost-effective transportation option, assuming that any minor regulatory discrepancies can be resolved upon arrival in Australia. The correct answer is A. Relying on the international horse transporter's general knowledge of animal shipping and assuming they have secured all necessary permits and health clearances for both countries. Explanation: the analysis reveals a scenario where an equine insurance specialist must navigate the complexities of interstate and international transportation regulations for insured horses. This is professionally challenging because noncompliance can lead to significant financial penalties, delays, potential harm to the animal, and reputational damage for both the specialist and the insurer. The specialist must possess a thorough understanding of the specific legal frameworks governing animal movement across borders and between states, which often involve varying requirements for health certificates, permits, quarantine, and carrier standards. The correct approach involves proactively identifying and adhering to all applicable interstate and international transportation regulations. This means consulting relevant government agencies, e.g., USDA AFIs in the US, DFRA in the UK, or equivalent bodies in other jurisdictions, understanding the specific documentation required for the origin and destination, and ensuring the chosen transportation methods meet all stipulated welfare and safety standards. This approach is correct because it directly aligns with the duty of care owed to the insured, the insurer's need to mitigate risk, and the legal obligation to comply with all relevant laws and regulations. Failure to do so could invalidate coverage or lead to claims disputes. An incorrect approach would be to assume that standard domestic transportation practices are sufficient for international or interstate moves. This fails to acknowledge the distinct regulatory landscapes that govern cross-border and interstate animal movement. Such an assumption could lead to the horse being denied entry, quarantined at the owner's expense, or suffering adverse health consequences due to inadequate preparation, all of which would be a breach of the specialist's professional responsibilities. Another incorrect approach is to rely solely on the assurances of the transporter without independent verification of regulatory compliance. While transporters have responsibilities, the ultimate responsibility for ensuring that all legal requirements are met often rests with the owner, and, by extension, their insurance specialist who is advising on or facilitating the process. Delegating this critical oversight without due diligence is a significant professional failing. Finally, an incorrect approach would be to prioritize cost savings over regulatory compliance. While economic considerations are important, they must never supersede legal and ethical obligations. Choosing a cheaper transportation option that bypasses necessary permits or health checks is a direct violation of regulations and exposes all parties to unacceptable risks. The professional decision-making process for similar situations should involve a systematic risk assessment. This includes identifying the specific jurisdictions involved in the transportation, researching the applicable regulations for each, consulting with relevant authorities, obtaining all necessary documentation, and verifying the compliance of the chosen transportation provider. A proactive, informed, and diligent approach is paramount to safeguarding the insured animal and upholding professional integrity. Question 10. The evaluation methodology shows that when investigating a claim for a horse suffering from a chronic condition that has recently exacerbated, an equine insurance specialist must determine coverage. Which of the following investigative approaches best adheres to regulatory requirements and professional ethical standards for claims handling? Option A. Deny the claim outright, citing the chronic nature of the condition as an exclusion, without further investigation into the specifics of the exacerbation. Option B. Immediately approve the claim based on the policyholder's assertion of the condition's exacerbation, as the horse is clearly suffering. Option C. Request all available veterinary records, review the policy's wording regarding pre-existing and chronic conditions, and obtain an independent veterinary opinion on the prognosis and causal link to the exacerbation. Option D. Rely solely on the initial veterinarian's report provided by the policyholder to assess the severity of the exacerbation and determine coverage. The correct answer is B. Immediately approve the claim based on the policyholder's assertion of the condition's exacerbation, as the horse is clearly suffering. Explanation. The evaluation methodology shows that investigating equine insurance claims requires a meticulous and objective approach, balancing the insurer's need to verify the claim's validity with the policyholder's expectation of fair treatment. This scenario is professionally challenging because it involves subjective elements like the horse's prognosis and the potential for differing interpretations of veterinary reports, alongside the critical need to adhere strictly to the policy wording and relevant regulatory guidelines. A failure to conduct a thorough and unbiased investigation can lead to financial loss for the insurer, dissatisfaction for the policyholder, and potential regulatory breaches. The correct approach involves a comprehensive review of all submitted documentation, including veterinary records, purchase documents, and the policy itself, followed by an independent veterinary assessment if necessary. This approach is right because it ensures that the claim is evaluated based on factual evidence and expert opinion, directly aligning with the principles of good faith and fair dealing mandated by insurance regulations. It also upholds the contractual obligations outlined in the policy, ensuring that only covered losses are paid. This systematic process minimizes the risk of erroneous claim decisions and maintains the integrity of the insurance process. An incorrect approach that relies solely on the policyholder's initial statement without independent verification fails to meet the insurer's duty of care and regulatory obligations to investigate claims thoroughly. This can lead to the payment of fraudulent or invalid claims. Another incorrect approach, which involves prematurely denying coverage based on a preliminary veterinary opinion without exploring all avenues for recovery or alternative treatment options, can be seen as acting in bad faith and may violate regulatory requirements for fair claims handling. Furthermore, an approach that prioritizes cost saving over a complete and accurate assessment of the loss, potentially leading to an underpayment of a valid claim, also constitutes a failure to act in good faith and can result in regulatory penalties. Professionals should employ a decision-making framework that prioritizes objectivity, thoroughness, and adherence to regulatory requirements. This involves establishing clear investigation protocols, documenting all steps taken, seeking expert opinions when necessary, and communicating transparently with the policyholder throughout the claims process. The ultimate goal is to reach a fair and compliant resolution based on the evidence and the terms of the insurance contract. Question 11. Governance review demonstrates that an equine insurance specialist has received an urgent call from a client whose horse is exhibiting signs of severe abdominal discomfort, strongly suggestive of colic. The client is distressed and immediately asks if the insurance policy will cover the extensive veterinary diagnostics and treatment required. The specialist recalls that many equine policies have specific exclusions or limitations regarding digestive system issues, including colic and ulcers, particularly if they are considered pre-existing or if certain preventative measures have not been taken. The specialist needs to provide an initial response that is both informative and compliant with regulatory guidelines for insurance advice. Which of the following approaches best reflects the required professional and regulatory conduct in this situation? Option A. Advise the client to consult their veterinarian for a diagnosis and treatment plan, and then promise to review the policy to see if any part of the veterinary bill might be reimbursed, emphasizing that reimbursement is not guaranteed. Option B. State that digestive system problems are generally excluded from standard equine insurance policies and that the client should not expect any coverage for colic or ulcers, regardless of the policy's specific terms. Option C. Immediately assure the client that the policy will cover all necessary veterinary expenses for colic, as it is a common and serious equine health issue, and advise them to proceed with veterinary care without delay. Option D. Inform the client that while the situation sounds serious, the policy's coverage for digestive issues like colic and ulcers is complex and often subject to specific exclusions or waiting periods, and that a thorough review of their policy wording is necessary before any definitive statement on coverage can be made. The correct answer is C. Immediately assure the client that the policy will cover all necessary veterinary expenses for colic, as it is a common and serious equine health issue, and advise them to proceed with veterinary care without delay. Explanation. This scenario presents a professional challenge because it requires the equine insurance specialist to navigate a complex situation involving a client's horse experiencing a digestive issue, potentially colic, while simultaneously managing the client's financial concerns and the insurer's policy terms. The specialist must balance providing accurate, empathetic guidance with adhering strictly to the policy's coverage limitations and the regulatory framework governing insurance advice. The challenge lies in interpreting the policy scope regarding pre-existing conditions or exclusions related to digestive health and communicating this clearly and ethically to the client without offering veterinary advice, which is outside their professional scope. The correct approach involves a thorough review of the specific equine insurance policy in question, focusing on clauses related to digestive system health, colic, and ulcers, including any definitions, exclusions, or waiting periods. The specialist must then communicate the findings of this review to the client, clearly explaining what is and is not covered under their policy based on the policy wording and relevant insurance regulations. This approach is correct because it prioritizes adherence to the contractual agreement, the insurance policy, and the regulatory framework that mandates transparency and accurate representation of policy terms. It avoids offering veterinary opinions or making assumptions about the horse's condition, thereby staying within the specialist's professional and legal boundaries. This upholds the ethical duty to the client by providing clear, policy-based information and protects the insurer by ensuring claims are processed according to the agreed terms. An incorrect approach would be to immediately advise the client to seek veterinary treatment and assure them that the policy will cover all costs without first verifying coverage. This is a regulatory and ethical failure because it constitutes providing a guarantee of coverage that has not been confirmed, potentially misrepresenting the policy's terms and leading to a denied claim and client dissatisfaction. It also blurs the line between insurance advice and veterinary advice. Another incorrect approach would be to dismiss the client's concerns outright, stating that digestive issues are generally not covered without a detailed review of the specific policy and the circumstances. This is an ethical failure as it demonstrates a lack of diligence and empathy towards the client's situation, and a failure to properly assess the policy's applicability. It also risks overlooking potential coverage that might exist under specific circumstances or endorsements. A third incorrect approach would be to interpret the policy based on general industry knowledge of equine insurance rather than the precise wording of the client's specific policy. This is a regulatory failure as it deviates from the principle that insurance contracts are specific agreements, and their interpretation must be based on their exact terms. Relying on general knowledge can lead to misinterpretations and incorrect advice, potentially violating consumer protection regulations. The professional decision-making process for similar situations should involve a systematic approach. 1. Listen empathetically to the client's concerns. 2. Immediately identify the need to consult the specific policy documents. 3. Conduct a meticulous review of the policy, paying close attention to definitions, exclusion, and any endorsements related to the digestive system, colic, and ulcers. 4. Consult internal guidelines or regulatory resources if there is ambiguity in the policy wording. 5. Communicate the findings clearly and concisely to the client, explaining what the policy covers and does not cover, referencing specific policy clauses where appropriate. 6. Advise the client on the next steps according to the policy, such as filing a claim if applicable, and recommend they consult their veterinarian for diagnosis and treatment, clarifying that the insurer covers veterinary costs only if the policy terms are met. 7. Document all communications and actions taken. Question 12. The monitoring system demonstrates a consistent pattern of reduced forage intake and increased concentrate consumption by a policyholder's insured horse over the past week. The policyholder has expressed concern about the horse's weight loss. As an equine insurance specialist, what is the most appropriate course of action regarding the horse's feeding and nutrition in relation to the insurance policy? Option A. Inform the policyholder that the observed feeding changes likely constitute a breach of policy terms related to horse management and may invalidate coverage. Option B. Advise the policyholder to immediately consult with a veterinarian or an equine nutritionist to assess the horse's condition and dietary needs. Option C. Suggest that the policyholder adjust the horse's diet by increasing the amount of concentrate and reducing forage based on the monitoring system's data. Option D. Recommend specific feed brands and supplement regimens that are known to promote weight gain in horses. The correct answer is B. Advise the policyholder to immediately consult with a veterinarian or an equine nutritionist to assess the horse's condition and dietary needs. Explanation. Scenario analysis. This scenario presents a professional challenge for an equine insurance specialist by requiring them to interpret data from a monitoring system related to a horse's feeding and nutrition, and then to advise on potential insurance implications without overstepping their regulatory boundaries. The challenge lies in distinguishing between providing general nutritional advice, which may be outside the scope of an insurance specialist, and identifying potential risks or policy breaches related to the horse's welfare and management, which directly impact insurance coverage. Careful judgment is required to ensure advice is relevant to the insurance policy and does not constitute veterinary or nutritional consultancy. Correct approach analysis. The correct approach involves recognizing that the monitoring system's data, while indicative of potential nutritional issues, requires expert veterinary or nutritional assessment. The equine insurance specialist's primary responsibility is to assess if the observed conditions, if confirmed by a qualified professional, could lead to a claim that is excluded or limited by the policy terms. Therefore, advising the policyholder to consult with a veterinarian or equine nutritionist is the most appropriate action. This aligns with regulatory frameworks that expect insurance professionals to act within their expertise and to direct clients to appropriate qualified professionals for specialized advice. It upholds ethical standards by prioritizing the horse's welfare and ensuring the policyholder receives accurate, professional guidance from the correct source, thereby protecting both the policyholder and the insurer from misinterpretations or unsubstantiated claims. Incorrect approach is analysis. Advising the policyholder to immediately adjust the horse's diet based solely on the monitoring system's output is an incorrect approach. This constitutes providing direct nutritional advice, which is outside the scope of an equine insurance specialist's license and expertise. It could lead to adverse health outcomes for the horse and potential liability for the specialist and insurer if the advice is flawed. Ethically, it breaches the principle of acting within one's competence. Suggesting that the monitoring system's data automatically indicates a policy breach and therefore invalidates coverage is also an incorrect approach. Insurance policies typically require evidence of negligence or specific conditions leading to a claim, not just data that might suggest a problem. Prematurely declaring a policy breach without proper investigation or confirmation from qualified professionals is an overreach and potentially a breach of fair dealing principles. Recommending specific feed brands or supplements to the policyholder based on the monitoring system's readings is another incorrect approach. This is a direct form of nutritional consultancy and product endorsement, which is beyond the professional remit of an insurance specialist. It carries similar risks of misdiagnosis and liability as directly advising on diet changes. Professional reasoning. Professionals in this situation should follow a structured decision-making process. 1. Identify the core issue. The monitoring system shows potential nutritional concerns. 2. Determine professional scope. Is this within the expertise of an equine insurance specialist? No, direct nutritional advice or diagnosis is not. 3. Assess policy relevance. Could these potential issues, if confirmed, affect the insurance policy? Yes, if they lead to illness or injury. 4. Identify appropriate action. Direct the policyholder to the correct qualified professional for assessment and advice. 5. Communicate clearly. Explain to the policyholder why this referral is necessary and how it relates to their insurance coverage. 6. Document all interactions and advice given. Question 13. Compliance review shows that a stable owner, operating in Kentucky, is seeking an equine activity liability insurance policy. The owner has highlighted their reliance on the Kentucky Equine Activity Liability Act for protection against certain claims. Which of the following approaches best ensures the policy aligns with the statutory protections afforded to the stable owner? Option A. Suggest the stable owner obtain individual waivers from all participants, as this is the primary mechanism for protection under the Kentucky Equine Activity Liability Act, regardless of insurance. Option B. Advise the stable owner that the Kentucky Equine Activity Liability Act is a standard disclaimer and does not significantly impact insurance policy requirements. Option C. Recommend a comprehensive general liability policy with standard exclusion, assuming the Kentucky Equine Activity Liability Act provides broad, uniform protection. Option D. Review the policy to confirm it explicitly addresses the protections and limitations outlined in the Kentucky Equine Activity Liability Act, ensuring coverage aligns with statutory requirements. The correct answer is C. Recommend a comprehensive general liability policy with standard exclusions, assuming the Kentucky Equine Activity Liability Act provides broad, uniform protection. Explanation. This scenario is professionally challenging because it requires an equine insurance specialist to navigate the nuances of state-specific equine activity liability acts, which are designed to shield equine activity sponsors from liability under certain conditions. The specialist must accurately assess whether the provided insurance policy adequately addresses the protections afforded by these acts, considering that the scope and enforceability of these acts can vary significantly by state. A failure to correctly interpret and apply these laws could lead to inadequate coverage for the sponsor, potential legal disputes, and reputational damage for both the specialist and the insurance provider. The correct approach involves a thorough review of the policy's wording to ensure it explicitly acknowledges and aligns with the protections offered by the relevant state's Equine Activity Liability Act. This includes verifying that the policy's exclusions and conditions do not inadvertently negate the statutory protections. For instance, if the Act requires specific signage or waivers to be in place for its protections to apply, the policy should ideally reflect an understanding of these requirements or be structured to cover situations where such measures are met. This approach is ethically and regulatorily sound, as it prioritizes providing coverage that is consistent with the legal framework intended to manage risk in equine activities, thereby fulfilling the duty of care to the insured sponsor. An incorrect approach would be to assume that all equine activity liability acts offer uniform protection, and therefore a standard liability policy is sufficient. This fails to recognize the state-specific nature of these laws and the potential for variations in their application, and the conditions under which they are effective. Such an assumption could lead to a policy that does not provide the intended level of protection, exposing the sponsor to liabilities that the act was meant to mitigate. Another incorrect approach is to focus solely on the general liability coverage without considering the specific provisions or limitations that might be introduced by the Equine Activity Liability Act. This oversight could result in the policy not adequately addressing the unique risks associated with equine activities as defined and potentially limited by state law. A third incorrect approach would be to recommend a policy that relies heavily on waivers of liability without confirming that these waivers are legally enforceable under the specific state's Equine Activity Liability Act. While waivers are often a component of risk management in equine activities, their effectiveness is directly tied to state law, and a policy that over-relies on them without this legal validation is professionally unsound. Professionals should adopt a decision-making framework that begins with identifying the specific state, where the equine activity will take place. This is followed by a detailed review of that state's Equine Activity Liability Act, paying close attention to definitions, limitations, and any specific requirements for liability protection, e.g., signage waivers. The insurance policy should then be analyzed against these statutory provisions to ensure comprehensive alignment and adequate coverage for the sponsor. This systematic, legally informed approach ensures that the insurance product effectively addresses the intended risk mitigation as defined by applicable law. Question 14. Consider a scenario where an equine insurance specialist is evaluating an application for a comprehensive mortality and major medical insurance policy for a young, high-performance show jumper. The applicant has provided a detailed veterinary history, but the specialist notes the horse is a thoroughbred. What breed-specific risk factor, when combined with the discipline of show jumping, presents the most significant underwriting challenge that requires careful consideration for policy terms and premium? Option A. The tendency for thoroughbreds to be more temperamental and difficult to train, which can lead to handler error and increased risk of minor accidents during training sessions. Option B. The inherent susceptibility of thoroughbreds to certain metabolic disorders, which are generally manageable with diet and do not typically impact performance or longevity in show jumping. Option C. The breed's genetic predisposition to respiratory conditions, which, while common in many athletic horses, are not significantly amplified by the specific stresses of show jumping. Option D. The breed's predisposition to skeletal fragility and leg injuries, such as fractures and tendon damage, which are exacerbated by the high-impact demands and repetitive stress of competitive show jumping. The correct answer is B. The inherent susceptibility of thoroughbreds to certain metabolic disorders, which are generally manageable with diet and do not typically impact performance or longevity in show jumping. Explanation. This scenario is professionally challenging because it requires the equine insurance specialist to move beyond a general understanding of equine risks and delve into breed-specific predispositions and their impact on insurance underwriting and policy terms. The specialist must balance the need to accurately assess risk for the insurer with the ethical obligation to provide clear and fair advice to the policyholder, ensuring they understand the limitations and potential exclusions of their policy. This requires a nuanced understanding of how breed characteristics, combined with specific equestrian disciplines, can significantly alter the likelihood and severity of claims. The correct approach involves a thorough assessment of the specific breed's known genetic predispositions, common injuries associated with its typical use in the specified discipline, and how these factors translate into increased risk for the insurer. This leads to a more accurate premium calculation and the potential for tailored policy endorsements or exclusions that clearly communicate the covered risks to the policyholder. This aligns with regulatory requirements for fair dealing and transparency, ensuring that the policyholder is fully informed about what is and is not covered. thereby preventing future disputes and upholding the integrity of the insurance contract. An incorrect approach that focuses solely on the general health of the horse without considering breed-specific vulnerabilities fails to adequately assess risk. This could lead to underpricing the policy, exposing the insurer to unexpected losses, and potentially violating regulatory principles of accurate risk assessment and underwriting. Another incorrect approach that ignores the discipline's inherent risks, such as the high impact of eventing on skeletal structures, would also be a failure. This overlooks a critical factor in equine insurance, leading to an inaccurate risk profile and potentially inadequate coverage or premium. A further incorrect approach that involves making assumptions about the horse's future health based on its breed alone, without considering individual factors or the specific discipline, is also professionally unsound. This lacks the detailed analysis required for accurate underwriting and could result in misrepresentation of policy terms or coverage. Professional decision-making process for similar situations should involve a systematic evaluation of the breed's known characteristics, the demands of the specified discipline, and any available veterinary history. This data should then be cross-referenced with the insurer's underwriting guidelines and the specific policy terms. Transparency with the policyholder about any identified breed or discipline-specific risk factors and their implications for coverage is paramount. Question 15. The control framework reveals a situation where a prospective policyholder has submitted a veterinary report for a horse that indicates a mild, chronic lameness issue, which has been managed with routine care and has not significantly impacted the horse's performance in its current discipline. The equine insurance specialist is tasked with underwriting this policy. Which of the following approaches best aligns with regulatory expectations for accurate risk assessment and fair treatment of the policyholder? Option A. Decline coverage outright due to the presence of any pre-existing condition, irrespective of its severity or impact. Option B. Conduct a detailed assessment of the veterinary report, considering the condition's stability, prognosis, and impact on the horse's intended use, and then determine appropriate policy terms, which may include a specific exclusion or adjusted premium, with full disclosure to the policyholder. Option C. Proceed with issuing the policy without any adjustments or specific disclosures regarding the pre-existing condition, assuming it is minor. Option D. Impose a broad exclusion for all leg-related issues, even those unrelated to the diagnosed condition, to mitigate potential future claims. The correct answer is A. Decline coverage outright due to the presence of any pre-existing condition, irrespective of its severity or impact. Explanation. The control framework reveals a common challenge in equine insurance, balancing the need for accurate risk assessment with the practicalities of underwriting. This scenario is professionally challenging because it requires the specialist to interpret potentially ambiguous information and make a judgment call that directly impacts both the insurer's financial exposure and the policyholder's coverage. The specialist must navigate the gray areas of veterinary reporting and decide whether to accept a policy with a known, albeit minor, pre-existing condition, or to decline coverage or impose specific exclusions, which could be detrimental to the client. Careful judgment is required to ensure the policy accurately reflects the risk without being overly punitive or exposing the insurer to undue risk. The correct approach involves a thorough review of the veterinary report, cross-referencing it with the horse's history and the specific terms of the proposed policy. This includes assessing the severity and prognosis of the diagnosed condition, considering any treatment already undertaken, and evaluating the horse's intended use. If the condition is deemed minor, stable, and unlikely to significantly impact the horse's performance or longevity for its intended purpose, and if the policy terms allow for such exceptions with appropriate disclosure, then proceeding with the policy, potentially with a minor exclusion or increased premium, is the most professional and compliant course of action. This approach adheres to the principle of utmost good faith by ensuring transparency with the policyholder and accurately reflecting the risk to the insurer, in line with regulatory expectations for fair dealing and accurate underwriting. An incorrect approach would be to automatically decline coverage solely based on the presence of any pre-existing condition, regardless of its severity or impact. This fails to exercise professional judgment and could be seen as a breach of the duty of care to the client, potentially violating principles of fair treatment and market conduct if such a blanket policy is not justifiable by the insurer's underwriting guidelines. Another incorrect approach would be to accept the policy without any adjustment or specific disclosure of the pre-existing condition, thereby misrepresenting the risk to the insurer and potentially leading to future claims disputes. This violates the principle of accurate risk assessment and could be considered a failure in due diligence, exposing the insurer to unforeseen liabilities and potentially breaching regulatory requirements for accurate policy issuance. A third incorrect approach would be to impose an overly broad exclusion that renders the policy practically useless for the horse's intended purpose, without a clear and justifiable underwriting rationale. This could also be seen as unfair to the policyholder and a failure to act in their best interests within the bounds of sound underwriting. Professionals should adopt a decision-making process that prioritizes a comprehensive understanding of the risk, a clear application of underwriting guidelines, and transparent communication with all parties. This involves a systematic evaluation of all available information, a consideration of the potential impact of any identified issues on the insured risk, and a decision that is both ethically sound and regulatorily compliant. Question 16. The audit findings indicate a pattern of inconsistent claim handling for equine colic incidents. A policyholder's horse has been diagnosed with colic by a veterinarian, and the policyholder is seeking clarification on their coverage and the next steps. As an equine insurance specialist, what is the most appropriate course of action to ensure fair and compliant claim resolution? Option A. Review the specific policy wording for colic coverage, consult the veterinary diagnosis and treatment plan, and communicate clearly with the policyholder about their coverage based on these factors. Option B. Advise the policyholder on the best surgical options for colic and recommend a specific veterinary clinic. Option C. Immediately deny the claim, citing colic as a pre-existing condition, without reviewing the policy or veterinary documentation. Option D. Issue a standard payout amount for colic, regardless of the specific diagnosis, treatment, or policy terms. The correct answer is A. Review the specific policy wording for colic coverage, consult the veterinary diagnosis and treatment plan, and communicate clearly with the policyholder about their coverage based on these factors. Explanation. Scenario analysis. This scenario is professionally challenging because it requires the equine insurance specialist to navigate a complex situation involving a high-value insured asset, the horse, experiencing a serious medical emergency, colic. The specialist must balance the insurer's financial interests with the ethical obligation to ensure the insured receives appropriate guidance and support during a stressful time. Misinterpreting the policy terms or the diagnostic information could lead to a claim denial, financial hardship for the policyholder, and potential regulatory scrutiny for the insurer. The specialist's role extends beyond simple claims processing to providing informed assistance within the bounds of the policy and relevant regulations. Correct approach analysis. The correct approach involves thoroughly reviewing the specific policy wording related to colic, including any exclusions, waiting periods, or required diagnostic procedures. It also necessitates understanding the typical diagnostic pathways for colic and the role of veterinary professionals in this process. The specialist must then communicate clearly with the policyholder, explaining the policy's coverage for colic based on the veterinary diagnosis and treatment plan, while also outlining any steps the policyholder needs to take. This approach aligns with regulatory requirements for fair claims handling and ethical obligations to provide clear, accurate information to the insured. It upholds the principle of acting in good faith by ensuring the policyholder understands their coverage and the insurer's obligations. Incorrect approach is analysis. One incorrect approach is to immediately deny coverage based on a general understanding of colic as a common equine ailment, without a detailed review of the specific policy and the veterinary diagnosis. This fails to adhere to the principle of fair claims handling, as it bypasses the necessary investigation into whether the specific circumstances of the colic episode are covered under the policy. It also demonstrates a lack of due diligence and could be seen as an arbitrary denial, potentially violating regulatory guidelines that mandate a thorough and impartial assessment of claims. Another incorrect approach is to provide definitive medical advice or recommend specific treatments to the policyholder. Equine insurance specialists are not licensed veterinarians. Offering medical advice oversteps the specialist's professional scope and could lead to improper treatment, exacerbating the horse's condition and potentially leading to further financial loss for both the policyholder and the insurer. This action could also expose the insurer to liability and is a breach of professional conduct, as it encroaches on the domain of veterinary professionals. A third incorrect approach is to assume that all colic cases are treated identically, and to apply a standard predetermined payout without considering the specific diagnosis, treatment, and policy terms. Colic can range from mild, self-resolving cases to severe surgical emergencies. The diagnostic process, treatment options, and prognosis all influence the ultimate cost and the extent of coverage. Failing to individualize the assessment based on the veterinary findings and policy specifics is a failure to conduct a proper claims investigation and could result in either an underpayment or an overpayment, both of which are professionally unacceptable and potentially in violation of regulatory requirements for accurate claims settlement. Professional reasoning. Professionals should approach such situations by first consulting the specific policy documentation to understand the exact terms and conditions related to the insured event. This is followed by a clear understanding of the veterinary diagnosis and treatment plan provided by a qualified veterinarian. The specialist must then cross-reference the veterinary findings with the policy coverage, identifying any limitations or exclusions. Communication with the policyholder should be transparent, explaining the coverage based on the policy and the veterinary assessment, and outlining the next steps. If there is ambiguity, seeking clarification from underwriting or legal counsel within the organization is a prudent step. This systematic approach ensures compliance with policy terms, regulatory requirements for fair claims handling, and ethical obligations to the policyholder. Question 17. Operational review demonstrates that a significant number of applications for equine insurance are for horses of specific breeds known to have a higher incidence of certain orthopedic conditions. As an equine insurance specialist, what is the most appropriate approach to underwriting these applications to ensure both accurate risk assessment and fair treatment of policyholders? Option A. Decline coverage outright for horses of breeds identified as having a high predisposition to orthopedic conditions, citing the inherent risk as uninsurable. Option B. Completely disregard breed as a factor in risk assessment, focusing solely on the individual horse's current health and management to ensure no potential for perceived bias against certain breeds. Option C. Conduct a thorough risk assessment for each application, considering the breed's known predispositions as one factor among many, alongside the individual horse's veterinary records, age, intended use, and management practices, to determine appropriate coverage and premium. Option D. Implement a policy that automatically assigns higher premiums or imposes specific exclusions for all horses of breeds identified as having a predisposition to orthopedic conditions, regardless of the individual horse's health history or management. Correct answer is D. Implement a policy that automatically assigns higher premiums or imposes specific exclusions for all horses of breeds identified as having a predisposition to orthopedic conditions, regardless of the individual horse's health history or management. Explanation. This scenario presents a professional challenge because it requires the equine insurance specialist to balance the need for accurate risk assessment with the ethical obligation to avoid discriminatory practices based on breed. The predisposition of certain breeds to specific health conditions is a well-documented veterinary reality, and ignoring this could lead to underpricing risk and financial instability for the insurer. However, overemphasizing breed-specific risks without considering individual horse health and management can lead to unfair pricing or outright refusal of coverage for otherwise sound animals, potentially violating principles of fair dealing and market access. The specialist must navigate this by applying a nuanced approach that acknowledges breed predispositions as a factor in risk assessment, but does not make it the sole determinant of insurability or premium. The correct approach involves a comprehensive risk assessment that considers breed predispositions as one element among many. This approach is ethically and regulatorily sound because it allows for informed underwriting decisions based on objective data while still allowing for individual assessment. It aligns with the principle of underwriting for profitability and solvency, which is a core regulatory requirement for insurance companies. By acknowledging breed predispositions, the insurer can set appropriate premiums that reflect the statistical likelihood of certain conditions, ensuring the long-term viability of the insurance pool. This also allows for the development of specific policy endorsements or exclusions that accurately reflect the identified risks, providing transparency to the policyholder. An incorrect approach that solely relies on breed predispositions without considering individual horse health and management is ethically and regulatorily flawed. This would be considered unfair discrimination, as it penalizes an entire group of animals based on generalizations rather than their specific condition. Such an approach could lead to regulatory scrutiny for unfair trade practices and potentially violate consumer protection laws that aim to prevent discriminatory pricing or denial of services. It also fails to uphold the ethical duty to treat all clients fairly and equitably. Another incorrect approach that completely disregards breed predispositions as a risk factor is also professionally unsound. While aiming for fairness, this approach ignores established veterinary science and actuarial data. This can lead to underpricing of risk, potentially jeopardizing the financial stability of the insurer, and by extension, the ability to pay claims for all policyholders. Regulators expect insurers to underwrite responsibly, which includes utilizing all relevant and available risk assessment data. The professional decision-making process for similar situations should involve a systematic evaluation of all available risk factors. This includes understanding the specific health conditions commonly associated with different breeds, but critically, it also necessitates gathering detailed information about the individual horse's veterinary history, current health status, age, intended use, and management practices. The specialist should consult with veterinary professionals and utilize actuarial data to inform their assessment. The goal is to achieve a fair and accurate risk assessment that is both financially sound for the insurer and equitable for the policyholder, adhering to all applicable regulatory requirements for fair underwriting and non-discrimination. Question 18. The assessment process reveals a scenario where a client is seeking insurance for a young, unproven mare intended for future breeding and potential show jumping. The mare has no current health issues. Which of the following approaches best aligns with providing appropriate equine insurance coverage in this situation? Option A. Recommend a comprehensive mortality policy that includes specific endorsements for breeding risks and competitive performance, ensuring all potential future uses are covered from the outset. Option B. Recommend a veterinary expenses policy that covers routine and emergency care, as this is the most cost-effective way to manage potential health issues for a young horse. Option C. Recommend a standard mortality and morbidity policy that covers death and serious illness, advising the client that specific breeding or performance endorsements can be added later if needed. Option D. Recommend a basic mortality policy, as the mare is young and healthy, and suggest the client revisit insurance needs once the mare is proven in breeding or competition. The correct answer is C. Recommend a standard mortality and morbidity policy that covers death and serious illness, advising the client that specific breeding or performance endorsements can be added later if needed. Explanation. The assessment process reveals a common challenge in equine insurance, accurately identifying the most appropriate policy type for a client's specific needs and the horse's intended use. This scenario is professionally challenging, because misclassifying a policy can lead to significant financial and legal repercussions for both the insurer and the insured. It requires a deep understanding of various policy types, their coverage limitations, and the nuances of equine activities. Careful judgment is needed to balance client expectations with the insurer's underwriting guidelines and regulatory compliance. The correct approach involves thoroughly understanding the client's stated purpose for the horse, including its current and anticipated use, e.g., breeding, competition, pleasure riding, commercial activities. This understanding must then be mapped against the specific definitions and exclusions within available equine insurance policy types, such as mortality, morbidity, veterinary expenses, and third-party liability. The professional must then recommend the policy that most comprehensively covers the identified risks without overinsuring or underinsuring, ensuring all policy terms and conditions are clearly communicated to the client. This aligns with the regulatory duty to act in the client's best interest and to provide accurate, clear information, preventing potential misrepresentation or non-disclosure issues. An incorrect approach of recommending a general mortality policy without inquiring about the horse's competitive use fails to address the increased risks associated with performance activities, which are often subject to specific endorsements or higher premiums. This could lead to a claim being denied due to a policy exclusion, violating the principle of providing adequate coverage. Another incorrect approach of recommending a policy solely based on the lowest premium, without considering the breadth of coverage required for the horse's intended use, disregards the client's need for protection against potential losses, and could result in inadequate coverage. Recommending a policy that covers risks beyond the client's stated needs, such as extensive breeding coverage for a pleasure horse, is also an incorrect approach, as it may lead to unnecessary premium costs for the client and misrepresents the value proposition of the insurance. Professionals should employ a structured decision-making process. First, conduct a comprehensive needs analysis with the client, focusing on the horse's use, value, and potential risks. Second, thoroughly review the available policy types and their specific coverage detail, exclusions, and endorsements. Third, match the identified needs and risks to the most suitable policy, explaining the rationale and any limitations to the client. Finally, ensure all recommendations and policy details are documented and clearly communicated to the client, adhering to principles of transparency and client best interest. Question 19. Strategic planning requires an equine insurance specialist to proactively assess the potential financial implications of reproductive complications in insured mares. When a policyholder reports a mare experiencing difficulties during a high-risk pregnancy, what is the most appropriate course of action for the specialist to ensure compliance with regulatory frameworks and ethical obligations? Option A. Advise the policyholder that reproductive complications are typically excluded from coverage unless explicitly stated, and therefore the claim is likely to be denied. Option B. Suggest the policyholder seek alternative financing for veterinary treatment, as insurance policies rarely cover the full spectrum of foaling-related expenses. Option C. Immediately approve the claim based on the general understanding that pregnancy-related issues are often covered in equine insurance policies. Option D. Request detailed veterinary records pertaining to the mare's reproductive history, the current pregnancy, and the specific complications encountered, while cross-referencing these with the policy's terms and conditions and relevant regulatory guidelines. The correct answer is C. Immediately approve the claim based on the general understanding that pregnancy-related issues are often covered in equine insurance policies. Explanation. This scenario presents a professional challenge because it requires an equine insurance specialist to navigate the complexities of reproductive health and potential complications during pregnancy and foaling, which are inherently unpredictable and can lead to significant financial and ethical considerations for both the insurer and the policyholder. The specialist must balance the need to provide accurate and fair insurance coverage with the understanding of biological risks and the potential for claims. Careful judgment is required to assess the adequacy of policy terms and conditions in light of evolving veterinary knowledge and the specific circumstances of the insured mare. The correct approach involves a thorough review of the policy's specific clauses related to breeding, pregnancy, and foaling, coupled with an understanding of the relevant regulatory framework governing equine insurance. This includes ensuring that the policy clearly defines what constitutes a covered event, any exclusions related to pre-existing conditions or natural risks of reproduction, and the required veterinary documentation for claims. Adherence to the principles of good faith and fair dealing, as mandated by insurance regulations, is paramount. The specialist must also consider any specific guidelines issued by the relevant regulatory body concerning the underwriting and claims handling of reproductive risks in equine insurance. This proactive and informed approach ensures that the policy accurately reflects the risks undertaken and that claims are processed in accordance with legal and ethical standards. An incorrect approach would be to assume that all reproductive complications are automatically covered without a detailed examination of the policy wording and applicable regulations. This could lead to misinterpretation of coverage, potentially resulting in the denial of legitimate claims or the acceptance of risks not adequately priced for. Another incorrect approach would be to rely solely on anecdotal evidence or general industry practices without consulting the specific policy terms and regulatory guidance. This failure to adhere to the precise contractual obligations and legal requirements could expose the insurer to regulatory penalties and disputes with policyholders. Furthermore, failing to request and scrutinize appropriate veterinary reports and documentation for claims related to pregnancy and foaling would be a significant ethical and regulatory lapse, as it undermines the due diligence required in claims assessment. Professionals should adopt a decision-making framework that prioritizes a comprehensive understanding of the policy contract, the specific biological and veterinary context of the insured animal, and the governing regulatory landscape. This involves a systematic review of all relevant documentation, consultation with veterinary experts when necessary, and a commitment to transparent communication with the policyholder. When faced with ambiguity, the specialist should err on the side of clarity and seek clarification from underwriting or legal departments to ensure compliance and fair treatment of the insured. Question 20. Operational review demonstrates that a client's horse, while being ridden by a guest on the client's property, unexpectedly bolted, causing the guest to fall and sustain a fractured wrist. The guest is now seeking compensation from the client for medical expenses and pain and suffering. The client has an equine liability insurance policy. Which of the following actions best aligns with the equine insurance specialist's professional and regulatory obligations? Option A. Recommend that the client wait to see if the guest makes a formal claim before taking any action, as the policy may not apply if the guest does not pursue legal action. Option B. Advise the client to review their policy's bodily injury and property damage clauses and to notify the insurer immediately to initiate the claims process, as this incident appears to fall within the scope of liability coverage. Option C. Inform the client that since the injury was caused by their horse, it is a personal matter and they should handle it directly with the guest. Option D. Suggest to the client that they deny coverage because the guest was a social visitor and not a professional handler. The correct answer is B. Advise the client to review their policy's bodily injury and property damage clauses and to notify the insurer immediately to initiate the claims process, as this incident appears to fall within the scope of liability coverage. Explanation. This scenario presents a professionally challenging situation because it requires the equine insurance specialist to interpret the scope of a liability insurance policy in the context of a specific incident involving a third party. The challenge lies in accurately assessing whether the incident falls within the defined coverage for bodily injury or property damage, considering the policy's exclusions and conditions, and ensuring that the advice provided to the insured is compliant with regulatory requirements for insurance advice and claims handling. Careful judgment is required to avoid misrepresenting coverage or mishandling a potential claim, which could lead to regulatory sanctions and reputational damage. The correct approach involves a thorough review of the policy wording, specifically the definitions of bodily injury and property damage, and an assessment of the facts presented against these definitions and any applicable exclusions. This approach is correct because it directly addresses the core of the insured's query by applying the policy terms to the incident. Regulatory frameworks for insurance specialists typically mandate that advice given must be accurate, fair, and in the best interests of the client, which includes correctly interpreting policy coverage. Furthermore, adherence to claims handling regulations, which often require prompt and fair investigation of claims, is paramount. This methodical application of policy terms to facts ensures compliance with the duty of care owed to the insured and upholds the integrity of the insurance contract. An incorrect approach that focuses solely on the horse's involvement without considering the third party's injury or damage fails to address the fundamental nature of liability insurance, which is to protect the insured against claims from third parties. This oversight is a regulatory failure, as it demonstrates a lack of understanding of the purpose of liability coverage and could lead to the insured being uninsured for a valid claim. Another incorrect approach that immediately denies coverage based on a superficial understanding of the incident, without a detailed review of the policy and the specific circumstances, is also a regulatory and ethical failure. This haste can constitute a breach of good faith and fair dealing, potentially violating regulations that govern claims handling and require a thorough and impartial investigation before a coverage decision is made. An incorrect approach that suggests the insured should handle the matter personally without involving the insurer, even if the incident appears to fall under liability coverage, is a significant ethical and regulatory lapse. This advice undermines the purpose of the insurance policy and could expose the insured to substantial financial risk, violating the specialist's duty to act in the client's best interest and potentially contravening regulations related to the proper notification and handling of claims. The professional decision-making process for similar situations should involve a structured approach. 1. Understand the client's situation and the incident that occurred. 2. Obtain all relevant details about the incident, including any statements or evidence. 3. Carefully review the specific insurance policy in question, paying close attention to the definitions of covered perils, exclusions, conditions, and endorsements. 4. Apply the policy terms to the facts of the incident to determine if coverage is likely to apply. 5. Consult internal guidelines or senior colleagues if the interpretation is complex or ambiguous. 6. Provide clear, accurate, and compliant advice to the insured regarding their coverage and the next steps, including the claims process. 7. Document all advice given and decisions made thoroughly.